Hi, Greg Dorsey here at Leeb.com, Leeb.com. Today's Monday, August 30th. Well, stocks lost ground for the third week in a row last week, despite a strong rally on Friday. By Wall Street's perverse way of thinking, Friday's gain was justified since the latest reading on GDP, though down considerably from last month's estimate, was nevertheless slightly higher than what analysts were expecting this go-round. Investors also liked what they heard from Ben Bernanke last week at a gathering of economists in Wyoming. Also in the bad news is good news category, the Fed chair said the central bank stands ready to pump money into the system if the economy shows further signs of weakening. The Fed isn't the only central bank that's ready to jump into to jumpstart the economy with more money printing. After a surprise meeting today, the Japanese central bank said it's going to add an additional $118 billion in liquidity. The European central bank, meanwhile, is also likely to buy back bonds to offset the negative effects of recently imposed austerity measures. Adding to worries, President Obama stepped into the Rose Garden today to tell the media that he had discussed with his advisors additional measures to aid in the recovery, though he had nothing concrete to share with the press or the American public today. And this came on the heels of news that Americans earned less and spent more last month. Not surprisingly, today's stock market action put the major averages firmly in the red, wiping out much of those gains from Friday. The story remains much as we've depicted it in recent weeks. The major averages look set to test the lower bounds of the trading range they've been mired in for the better part of a year. A close on the S&P 500 below 1022.50 for 2 or more days, which is just a few percentage points below where we are now, would likely give way to a break below the 1,000 mark on the S&P. And depending on the news flow, we could see prices well below that mark. But as we've discussed, we think the Fed will step in before the decline gets out of hand. And if they do, that's likely to actually spark a pretty good rally. There's certainly lots more on the docket this week to bat stocks around. Consumer confidence, purchasing managers' data, vehicle sales, factory orders, productivity, and the big kahuna, unemployment statistics, due out on Friday. Volume may be non-existent on the big board these days, but the week promises to be anything but boring. That's all for now. Be sure to stop by soon.